Hello. Can you hear me?
Yeah.
Good. Lots of nods. So we've got a panel today of experts with a very diverse set of range of perspectives on this topic. To my right, all the way at the end, we've got Chaya Hanoomanjee, who's a managing director and partner at Austen Hays, a UK class action firm, predominantly on the claimant side. She was previously the leader of a class action team in another firm, and before that at a litigation funder, and so has a very multifaceted perspective on class actions and on funding. Then we have Scott Hardy, the founder of Top Class Actions, which since 2008 has given consumers a place to find access to lawsuits that they can participate in, funds class actions, and publishes news for consumers relating to class actions. And then most closely to me here, we've got Ben Moss, who's the co-head of litigation finance at Orchard Global. He's got a mixed legal and financial background and joined Orchard in 2020 from another leading litigation funder. Ben's got extensive experience leading funding all types of class actions and group actions, including landmark group and securities claims in the UK and Europe. I'm sure each one of them will give you a little bit more of their background as we go around. My name's Sivan. I'm a partner at Addleshaw Goddard. I advise funders and corporates and law firms and really anyone who gets involved in the litigation finance ecosystem. And so, without further ado, I'm going to launch straight in. I'm going to go first to Scott to ask, your business doesn't fund single cases. It only funds class and group actions. So I wondered if you could give us a little bit of commentary about what it is about funding class actions that makes them an attractive proposition and has led you to putting your business that way.
So I've been in the class action business for 16 years in the U.S. with Top Class Actions. And then we were also one of the first Arizona ABSs that formed with Legify Law. So that way we could assist in the litigation process across everything from class actions to mass arbitrations to single event personal injury cases and mass torts. And then this year we created Trimaxion, which is our litigation funding arm. And our first projects on the litigation funding side are mass torts. And we're different in a lot of ways because we control the law firm and we control the marketing agency. And so when we fund cases, that money goes through a non-recourse loan, very standard, to our law firm. And then that law firm then deploys a lot of that marketing capital through Top Class Actions to actually hit the case. And when we're looking at cases now, we're looking for cases that have a global impact that we can fund globally. And so this is the worst kept secret in the world because I love to talk. But what we're trying to do now is we're trying to take a great case that we start in the U.S., do a lot of the discovery, make sure we have a lot behind us, and then within about a year and a half, then file that globally. And so that's going to be filed like through a stichting or another process through the Netherlands. It'll be filed in the UK, it'll be filed across the EU and likely Italy, Spain, Germany, along with Australia. And we want to be able to exert global pressure for a settlement to help our clients through the law firm really see an end to these cases in a more expedient manner. And that's one of the things that we're really focused on. And then we'll be funding those class actions with all the number of different law firms throughout Europe and the UK at the same time. Does that kind of answer your question?
Yeah, I mean, for sure. They're obviously potentially very lucrative, and you've helped explain some of the other benefits. I mean, also that kind of top-down, multi-jurisdictional strategy that you might be able to deploy means that they are very attractive, but they're also a lot more complex to build. The structuring of the funding is quite uniquely difficult and uniquely challenging. So in addition to that, what Ben, if I could ask you that, we've sort of heard all the upsides, but are there any additional considerations focusing on class actions and funding them?
Absolutely. I mean, you've touched on it. On balance, not always, but compared to a single bilateral commercial claim, A class action is going to be more complex, more sophisticated, probably have longer duration too. And overall, it will be a heavier lift for a funder all the way through the underwriting process, the structuring process, but then also the case management process while you're sort of shepherding the case, hopefully to a positive resolution. You're still looking at all the same things you would do for a single commercial case, the merits of the case, the quantum of the case, is there recoverability, collectability at the back end. But there's a lot more moving parts. And I'll probably like to, maybe we can highlight 4 of them, and they're not all mutually exclusive. There is some overlap. But firstly, you typically have quite a lot of front-end risk, and that can take the form of just getting that claim strategy in place, understanding, where you're going to file, how you're going to file, what your target class is. If you're going down the opt-in and book build route, then you've got big book build risk. Will you get to that economic viability? How long is it going to take? How much cost is there going to be? But generally, it just means that you do have to consider who your counterparties are. Law firms should think about which funders they want to get into bed with, because they should choose funders based on their familiarity with class actions, because it is this heavier lift on all sides. But likewise, we will look for trusted counterparties across the spectrum who are experienced, be that the law firm or the digital marketeers, the claim administration platform people, the payment providers. You want people who have those experience given the complexities and the sophistication. The dynamics of the class is the second thing that you just don't have in single commercial claims. Starting with opt-in book build, you have that front-end piece, which is fraught with risk, and you can spend quite a bit of capital. So we really want to know about who's the target class, what is the strategy, is this going to be a digital marketing campaign because you've got thousands of consumers, is the platform robust enough to aggregate the data, weed out people who aren't members of the class, or is it a B2B opt-in situation where actually sometimes maybe the law firm, because they have good relationships with industry, can look to build that book, and you've got a much lower number of claims. So that's all sort of very important dynamics. Once you get beyond that book build, once you've hit that book threshold, in theory you kind of know the shape and the value of your claim, and you're a bit de-risked. So you're not home free, but it's helpful. Conversely, you look at an opt-out scenario where you're now into carriage, certification. Is it a first to file system, or what are the qualitative factors in the regime that would differentiate between your offering and your attempt to get your arms around the class and some other fund and law firm combination? So that these all just don't feature in single commercial claims. Thirdly, procedurally, and this is where funders pay so much attention to what's been going on in the relevant regimes. We've seen the Competition Appeal Tribunal, the CAT in the UK, where the first case that was certified, Merrick's, it's been, I think it was filed in 2016, 2017, and it's been the landmark case that every single point has been taken up that could be taken up to the Supreme Court and back, and appeals. We've learnt more about certification. Is it that low threshold, or is it a high bar, a mini trial in itself? Funders need to have, you'll never get certainty, but we need to have visibility on where we think this is going to end up whenever we're in a regime. WAMCA, we've seen some rulings recently where funders are restricted in even being able to pull out of funding of claims, even if the merits take a turn for the worse. And that is an adverse development, I would say, in relation to how funders can fund claims. And finally, duration. And duration, it applies at every stage, typically, of a group action. The front end can take longer when you're just trying to launch the claim, structuring the claim, book building. Then you've got all the procedural appeals and niggles that I've spoken about. You've then also potentially, each class action is different, but you don't really have the same prospect of an early, quick settlement, a quick resolution as you would do perhaps with two rational, smaller commercial counterparties who just want to get litigation over with. And finally, you've also got the distribution at the back end piece, where once you've got your judgment or your agreement as to what damages are going to be paid out, there is still that process to go through. So, I think those are the sort of 4 key factors we hone in on when we're looking at group and class actions.
Yeah, I think working with the right people early on is just a theme that comes back again and again, whether it's the right funder, the right marketing agency, the right damages distribution firm, and certainly seeing deals run into difficulty because not everyone's on the same page right from the outset. And I think, we talk about funding in class actions and everyone looks to the funders, but I think looking at litigation finance and litigation funding, actually, there's lots of players and there's lots of people who can fund. And I suppose one of the things that I wanted to ask is, do either of you have any comments on the role of the lawyers or of the law firm? And we've got a lot of private practice lawyers in the audience today. And what's their role in funding and in bringing the class actions? I think probably that most naturally goes to Chaya first.
Yes, so one thing that is quite rarely spoken about is how much investment law firms make in these cases. So firstly, you have to identify some sort of wrongdoing, and then an awful lot of time is spent by lawyers without getting paid in investigating the case, fact-finding, actually testing vehicles or electronics, working with experts and actually footing the bill for these experts, footing the bill for barrister opinions. And a lot of the time you're doing this without really knowing whether you will get funding or not. And so when you look at the statistics, it's apparently between 3 to 7% of cases that get funded. So you can imagine the number of cases that law firms have worked on which never got funded, even though you have very good lawyers working on these cases. And obviously there was a case there, but for one reason or another, it doesn't get funded. So there is that. So there is an element of funding up front by the law firm itself. And then on an ongoing basis, it's quite rarely the case that the WIP is going to be funded 100%. Often a law firm will take 50% of the risk or even more. So there is a lot of risk taken by law firms in all of these cases. And even though you don't call it funding, that there is a risk that's being assumed.
And it's so hugely expensive. I mean, with the insurance, if you're going to be getting insurance as the law firm, you said there's so much risk, which is why for some of these cases that we are essentially starting in the U.S. and we're trying to make sure, I don't see it as so much of a negative, and maybe it's because I'm new in the funding space, but I and my law firm, we've been hit by a funder that's pulled out. And so when all of a sudden you're expecting $25 million and poof, the rug comes pulled out from under you, man, that's painful. And it's also why I'm a funder now. and so I think it's critical, if you're a funder, that you should be as passionate about the case as the law firm that you're working with. You should believe in it and believe in the people that you're helping, the clients that are being helped. And I think the funders should be held to that same high standard that the law firms are. And you've got to have a great partnership with your law firm to understand the pain that they're going through, because this is their reputation as well, sure. And like you said, everything here is so expensive to go. It's high risk, but if you feel passionate about what you're trying to accomplish, I think that will, you got to fulfill the mission.
And particularly in Wales, where outside of the CAT, you have to really rely on the opt-in regime where you're book building. And Ben just mentioned that funders find it a bit more comfortable if you've done a bit of book build and some of the risks have been dealt with. Well, it's for the firm to then spend that money up front and book build. And it's a huge cost that is often borne by the firms without knowing what will happen.
I mean, I think a lot of the process can be de-risked by just tranching and staging and making sure there's very clear alignments and metrics. And this is the initial tranche of funding. This is what we need to get to the next tranche. And it may be that it does fall over, unfortunately, but hopefully you're never then in the position where you thought funding was a definite, and it's fallen away at the last minute, and the lawyer is left holding the baby. It should be a sort of more gradual process, always with the end goal in sight, but you can sort of structure around some of those risks by taking that approach.
And we are seeing some creative ways that funders are working with us to do that.
Well, and I think for lawyers, the wonderful thing about working with lawyers and attorneys and barristers you're all really smart. And so even if you hit a big speed bump during the litigation, it doesn't mean the case is over. And that's the great thing, is you figure out creative ways to get around it and revive what may have before been a dead case, and all of a sudden, it's back to life, and you're moving forward, and there's the path to justice for your clients.
Yeah, and I know one of the last panels we touched on, without getting into the pros and cons of having adverse costs, needing at a very early stage to deal with quite a large risk and quite a large exposure for the class, is something that I know every different player in the market can feed into. And so we've heard some of the considerations that go into funding the cases and how they're built. And certainly from looking at it from my practice, there's definitely, when I've looked at the deals, different levers that get pulled to structure the funding in different ways, to fund into the law firms, to fund it directly to the class and what have you. And the ideas are being originated in different ways. We just said there's lots of different actors that have to come together to make these class actions work and to make them viable. But thinking more about where these ideas are coming from and where you find the class actions that you decide to put your power and energy behind. Are there any particular sectors that are more or less attractive for all of you when you're looking at class actions? And are there any new sectors you expect to drive into? Let's go with Ben first.
I mean, there are definitely developments in certain areas which we find attractive and other areas which conversely we find unattractive. I mean, for example, and the constellation of events doesn't always fall like this, it's just opportunistically, but we don't ourselves at Orchard like to always be the first mover. We're quite cautious around that in a new jurisdiction or a new regime. The ideal is to be in a position where you're familiar, you have relationships, you know which law firm you partner up with, but you're just waiting and seeing for some initial decisions to be made. The big example, I think, across Europe over the last 10 years has been the trucks cartel. And we look at the first wave of the trucks cartel in Germany, but also the Netherlands and in Spain. And a lot of funders went into it, and you can imagine why. They looked at it. It's a follow-on decision against very solvent entities. Yes, we have to determine the overcharge, but okay, that's what you need to do. We have reason to believe, it will be at a reasonable level. We can book bill because there's so many truck hauliers out there. And you can see that the case made sense. And yet, 8 years later, that first wave got stuck because a lot of courts just hadn't dealt with that massive influx of number of claims, and they started unbundling thousands of individual claimants, which meant the adverse cost rates meant the funder couldn't process the claim. They ruled out an assignment model in Germany. They couldn't decide on the overcharge. And it's only been over time that you started getting some rulings from quantum experts in Spain and a lot of the proceedings going up to the Supreme Court in Germany, where they just started clarifying the issues. And now, because of the fortune that Scania is not, claims against Scania are not time barred, there's a second bite of the apple that funders can go into. But having looked at all of the learnings before and hopefully being able to sort of get involved in that class action, it will be a smoother path. So that's not really a sector, but that's what we like to see. We like to monitor and see, well, what's already been established, and is there more scope there? Or a bit more unfamiliar maybe to some of you, but in Poland there are individual claims, but they're mass consumer claims. Those who took out Swiss mortgages that were measured against the Swiss franc. And when the Swiss franc was depegged against the euro, that caused them to pay enormous mortgage costs that often they just weren't disclosed to by the banks. And again, the initial results, the initial first and second instance decisions, there was too much that was undecided. You didn't know how to frame your case. And then after a few years, suddenly you do. So a few things have gone up to the ECJ, come back down, and now there's sort of a 97% success rate, provided you file your case within the tramlines and you bring the book. So that's where we see an attractive class action as an entry point.
Well, for us, we're looking at more consumer class actions, and the first to go always gets all the arrows, right? And Steve Weisbrot's out there with Angie, and I remember talking about Dieselgate. and some of those consumer claims. And naturally, as entrepreneurs, we sit here and say, oh, this will be easier. You got to tell yourself it's easy before you do it, and then you find out how hard it is. And telling me about when he was advertising in one of the European countries and spending a lot of money, getting 0 clients signed up, because it turns up on top of the mountain, they speak a different dialect of the language than they do at the bottom of the mountain. And there are all these challenges when you're looking at trying to get these cases across the EU that you have to experience and spend a lot of money on. But for us, looking at consumer class actions and consumer cases where we can make a difference for the average person, that's what Top Class Actions has done since I started it, and that's really a big focus of what we're going to continue to go through.
So I think every law firm will have their own attitude to this, but from my point of view, I don't think we're really constrained by sector. Or we have huge constraints with the procedural regime that exists. So unless you can bring a claim through the Competition Appeal Tribunal, then you have to really look at an opt-in case, because there isn't a clear path to run a representative action in the UK. So, for example, some might say privacy or data privacy is not a hot area for funding, but I think that's largely to do with the Lloyd and Google case, where it was a representative action. But we've had to look at a different way of bringing a claim where it's an opt-in case and the level of damages are sufficiently high, and you can do that through book building.
And in terms of, so those are sort of some sectors that, or some areas that you're focusing on. Are there any areas that you're thinking no more, or I don't want to go near that anymore, or I've had my fingers burned? You're all nodding vigorously, so Scott, we'll go with you first.
Well, we're looking at some anti-competition cases, and those are very popular right now, especially, it seems, in the legal industry and the plaintiff side. So I like to tend to fish where others aren't. And since everybody has been going in that area, we've been moving away from it. And the challenge is that there aren't a lot of these really great consumer cases if we're looking at Europe and the UK, because of the dollar amounts and the challenge and the opt-ins and the cost for that. But I think that it's a great place to push forward on, and the anti-competition cases can be great cases. They've seen some very fast turnarounds, but it's not somewhere I want to go. And same thing with the data privacy violations. Those have been some quick turnarounds, but there's just a lot of competition in that one, and so we'll forward our own way.
How about you?
Well, I say that, but we're actually running 40 different investigations a month on those cases in the U.S. So
you might change. You reserve the right to change your mind.
Yes, absolutely.
Ben, any particular areas that you're either waiting to see what happens, or that you are not interested in, and why?
I think, I hope I'm not misspeaking for the industry, but there was a lot of funded interest in CAT claims against big tech, and then I think concentration limits, saturation point was just reached, because they can be good claims, but they're really not going to resolve quickly. They're going to be fought tooth and nail. So having that kind of exposure to a level is acceptable, but beyond that, there came a point where many opportunities from law firms or other intermediaries or market participants was other opportunities to go against big tech, and I think the funding community was, we're just going to wait and see at the moment. So that would be the first thing that comes to mind. UK consumer claims, Japanese knotweed, housing disrepair, car rental. There needed to be a professionalisation of that industry and of the law firms and insurers and market participants in that industry, because operationally they weren't as robust and there were some failures. So I believe that has happened, but up until recently we've been quite reticent to get involved with those type of claims. But as I say, that does seem to be trending positively in terms of the way they've reorganised that market. So we may change our view on that in future.
And given that many of those sectors and many of those issues that we were just talking about are global in their nature, I mean, Scott alluded to it at the intro that these issues affect consumers across multiple jurisdictions. How do you view the sort of opportunities around the world? Are there particular jurisdictions that there are greater or fewer opportunities? Or Scott, maybe I'll ask you this first.
So another friend of mine here, you've all seen before, Harris Pogus Goodhead. He really and his team really went forward in trying to get justice for consumers around the world. And I just had a conversation with another lawyer. We're looking at bringing consumer class action. It's a globally sold drug that they're making literally billions of dollars a year selling this drug, but it kills animals. And he said to me, Scott, how about Brazil? That's a great market for us. And I said, well, I can tell you, my friend Harris prosecuted some cases out there and took some cases to trial and had some great success in winning trials, but never got paid. And so there are definitely some markets that we are not entering into until we can see that there actually can be justice served for individuals. And the strongest markets still for us are going to be the US, the UK, and across the EU. And we're seeing some Eastern Bloc still, some Eastern European countries that border Russia, that there's great potential for some class action cases. And we were looking at bringing one there, and one of the lawyers there said, Scott, this is a great opportunity. We're going to be the first. And I went, oh, man, that's scary. That's a quick way to send millions of dollars into a country and never get it out. Great for the country, but not so great for our investors.
Yeah. How about you, Chaya? Obviously, as I said, primarily a UK-focused firm, but how do you see the opportunities across the continent, at least?
Well, I think we see a lot of opportunity to collaborate with firms in other jurisdictions, particularly within Europe, because you have the GDPR, which applies in pretty much the same way across different jurisdictions, but also there's usually the same systemic issue that has arisen with the defendant across multiple countries. And if there is a way to collaborate so that you share the cost of the initial investigation, expert cost, and so on, that there are good potentials to work together. And I think it's something funders should consider as well when they're looking at a case. Maybe ask the question, is there an opportunity here to fund different firms in different countries at the same time? Because you can also then spread the jurisdictional risk. If you are passionate about a case and you believe in the case, there is a way to spread the risk.
Unless anyone has anything else on that, I was going to take a turn to looking behind the scenes at funding and thinking.
Oh no! Don't do that.
It's been with the year that's passed. How's fundraising and the cost of capital at the moment in the market impacting upon, I suppose, the appetite to fund more generally, but funding class actions in particular, given the cost and to the extent it's not lumbering too much into one question, is the insurance position impacting upon that question?
So in terms of the availability of capital, I think the situation has eased/improved. I think what we saw in 2022, 2023, when we saw UK, US market interest rates just going back to the historic levels that they'd been, that there was a general repricing of risk within the financial markets, and litigation funding, which was perceived to be a riskier asset, fundraising activities connected to that was hit by that, and it impacted all similar sort of priced, similar risky sort of investment classes. What happened at the same time, I think, is that investors could look at funders' track record, especially funders who were looking at their third, fourth, and fifth fund, in a way that they didn't have that performance data maybe sort of 4 or 5 years ago. So that gave a different sort of dynamic to what they were looking for, and they could go into more granularity. So that's eased somewhat, but investors now are really concerned about 2Ds, diversification and duration. They want to understand how long these investments would take. The growth of the secondary market has helped because it has given some liquidity to some you know, to investments, although it's still not as widespread as some people think. But we're in a better position, I think, generally within the market in terms of capital. There's been a bit of a shakeout of some other, would we call them tourists? I don't want to be too pejorative, but people who flooded into the to the asset class a few years ago weren't really as experienced in it and suddenly thought, do you know what, you need a real degree of specialism here. Maybe we won't continue to sort of re-up next time round. So you've now got your sort of core players pretty much, which are stable. And there's a increased amount of class actions to fund. So there should be availability of capital. We are also seeing some institutions try to go direct to law firms, and I'll be interested to see, you know, if Chaya and other lawyers have experienced that, and offering to write some fairly big checks without going through a manager, without going through sort of a litigation funder. Again, I'm not sure how that will look in the next 3 to 5 years, because I think you just do need that relationship, that experience to really understand sort of how your money's being used. But that's definitely a feature of the industry that we have seen beginning to creep in recently. Do you want me to touch on the insurance point, or
let's see what the others say, and
Yes.
we'll come back to insurance in a second.
So I think just to touch on your point, what I have seen a bit more in the last year or so is groups of people getting together and saying we've managed to raise X amount of money. But because there is no transparency around where's the money sitting, where is it coming from, who are you? And I think that sort of diligence isn't really done with funders. I mean, I've tried to stay away from that, but I think I've seen a lot more of that where people say we've managed to raise funds. But have they really, or is it a potential to get that money if they get a case from you, and then you're sitting there for a year waiting for that money to come through?
Yeah, and that's so important, is to understand where that money is coming from. And as a fund, you know, we do anti-money laundering checks. We do know your client checks, so we know who the money is coming from, making sure we get those commitments. There's been a lot of, yes, we're happy to back you, and then 6 months of due diligence later, nothing happens. So that's always a big concern. I think when we hit that peak ZIRP, that peak zero interest rate momentum, where there was so much cheap money flooding the markets, and it's gotten a lot more challenging. We're still very selective on which cases we're getting behind, especially as a newer fund. We can't lose, right? So we've got to make sure that every single case that we pick to back is an absolute winner. And that's hard. And that's the scary part. But I think if you're doing that due diligence, then you'll be able to make that happen. And as you mentioned, there are law firms now that are just going direct to funders, and they're getting attractive interest rates, and they're getting 8 to 9 figure lines of credit to run their law firms, and then sometimes going out there and getting additional loans for large litigation, large marketing to go through it. But as the funder, you have to be aware of every single penny that's being spent. And I know that some other large litigation funders, they're no longer giving money directly to law firms, especially if that money is going into the marketing. They're sitting there and they're saying, all right, exactly how much money do you need to run your law firm? And then which vendor am I paying to run this marketing? And then sending that money straight to that vendor, and then following up saying, what's the average cost per signed client? What's, you know, what are we, to have a very tight handle on it.
I think there is a risk with these sort of setups that you're dealing then with somebody who isn't that familiar with class actions, particularly in the UK, and they are trying to micromanage what you're doing without having had any understanding from the outset as to how this whole thing works.
Yeah, I think the point also about asking where the money comes from is so important, because we've certainly been instructed in the last year or two about more than one sort of class action that's being put together with a funder and with a law firm and with a class rep or whatever, only to find that actually the funds haven't even been raised yet, and the deal falls over for that reason, because people get excited about the opportunities. So asking where the money come from is important.
And is it there already?
And is it there, and is it ready to go? Because otherwise, there's been some painful conversations. But Ben, you were going to touch on the insurance and the impact on that's had.
So a market development that we've seen has been the availability both at the fund level and also, amazingly, not only on the portfolio cases, but also some single cases of capital protection insurance. We understand that there are funds out there who can offer with this product to investors and say, do you want to go naked and just be uncapital protected as you were before? Or this time around, would you like a capital protection wrapper? The question is, what are you giving away as upside for the capital protection wrapper? Because it can be quite expensive. But we understand that those products are available, and we're seeing sometimes some opportunities, as I say, single case opportunities that have a capital wrapper already there, or a policy that they've sort of given a non-binding indication of terms. For us at Orchard, we don't tend to avail ourselves of those products. Our investors know that this is a slightly riskier asset, but they know that, they're aware of that. We keep them abreast of what the risks are, and they know that they can make the returns. And I'm not sure you should pull together in a fund two different types of investors, because actually, as a manager, what is your investment strategy, and does it need to differ if you know that investors are capital protected rather than not capital protected? However, there's presumably a subset of investors who haven't invested in litigation finance before, whose target threshold returns are, not as high as other investors. And this could be attractive to them because they know that their downside is protected, and yet they're still going to get, hopefully, their target returns. So I think it's a useful addition to the market.
Yeah, and that's been interesting on the insurance side, because it used to be 10, 12% is what you'd pay to protect that capital, at least in the US. And now, due to some not great returns, the insurance rates have increased to 15 to 20%. But for like us as a new fund, it's incredibly, it's makes a lot of sense for us to protect that capital for the investors that are coming in, to know that, hey, if you invest this money, you're getting money back. Worst case scenario, you're getting money back. And it's been worth that expense for us to do it. But our challenge has been, looking at Europe and the UK, is how expensive the insurance is here comparatively. And so we're trying to get wrapped around that before we start funding our first cases next year here.
And trying to spread that cost. And also, Ben, you mentioned their portfolios. Do any of you have any comments, observations? Is there a preference to fund into portfolios, into law firms, in the context of class actions specifically?
I mean, from my experience in terms of class actions, I think when we talk about portfolio funding, traditionally it's where you have a facility and the funder says, I like this type of case, so you can add as many of these cases as you want, and we'll do a very minimal level of due diligence. And that clearly doesn't work with class actions, because each case is going to be so different and so complex that you have to consider each case individually anyway. What we are seeing a bit more is, when you go to a funder with a case, they'll say, have you got another 2-3 cases that we can look at all together, and then cross-collateralize between these cases so that, it spreads the risk for us. But that still requires them looking at each case individually. So I think that sort of facility or portfolio funding doesn't really work in the same way. And I think it's the same whether or not you're firm funded by a funder. Every single case that you decide to bring, it will still be considered by the funder.
No, I mean, I think just to add to that, once you get past that front-end risk that you do need to measure and make sure there's a jump-off point if things don't go on board and how much you've spent. Once you're in the wide open field of a certified class action, as a funder and as a law firm and as a class rep and as a member of the class, the funder just needs to be on for it. You can't, you just need to be, this is the investment we've made, we're comfortable with it, we're not sure exactly how it's going to work out, but it just is the investment we've made, and we're not going to jump around or jump out of it. And as you say, the way you can mitigate against just having a diversified portfolio of other investments, but to go to a single law firm and ask for other class actions, it just doesn't work. You do that class action, you've tried to de-risk it as much as you can, and you're hopeful now that you're all on the same team and you're going to get a positive resolution from that single case.
And from our perspective, we're funding each individual case separately. And so when we fund it, it's going to be this case in Europe, this case in the US, this case in the UK. And we'll be funding, by the end of next year, we'll be funding 3 to 4 per month. So it'll be fairly high volume.
Wow.
Conscious of the time, and we can't possibly have a panel talking about funding without saying the P word. With funding and the English market, I don't think we're narcissistic enough to think that the UK market is necessarily a bellwether for litigation funding around the world, but the world is watching. Post-PACAR, Chaya, without going back over that case in particular, how would you describe the legal landscape in England at the moment? And we've obviously just last week had the CJC's interim review. Where do you think it's taking the market? Or where's the market going?
I think as far as funding goes and where funders would be interested in looking at, it's certainly within the CAT, because in the last 2 years, there's been about 30 cases brought in the CAT with huge exposure to funders, and there hadn't been a single case settled until very recently. So I think that whole distribution settlement piece has started taking shape now a little bit with a smallish settlement, but at least funders know where they stand to some extent, because obviously the tribunal has to approve the settlement and approve whether funders get their money back and when they get their money back in the process. And I think there is a long-awaited judgment now in the claim of Paturel against BT, which will be the first full trial, and that will dictate to a large extent how this whole industry will take shape as far as competition claim is concerned. And then we have the CJC review, which has just been released, and there's a whole consultation process around that. And I think the whole aim of this is to determine whether there should be some regulation around funding, whether the industry is working the way it should, there is enough competition, or is there vexatious claimants, and everyone will have lots of views around this, but I do hope we don't end up in the same position as PACAR, where, you know, an industry which is really complex, with very complex cost rules around things, and very interesting rules around how funding should work already, but it's not something that should be considered lightly. And we just want to end up in a place where there is enough clarity. It doesn't stifle claimants from bringing claims. Already I mentioned how few cases get funded, so I don't think there is any risk of vexatious litigation in the UK. What I would like to see is a bit more support of claims that are not huge claims, because of the way funding works. You know, if you have a claim of under 150 million pounds, it's near impossible to get it funded. So you need to find big cases, and there are loads of industries where you can find smaller cases, but because of the fact that you don't get to recover the cost of funding, it makes it impossible for funders to fund and claimants to be able to bring these claims. So I think there is a lot to be done across the board with litigation funding, but I do hope the government is considering this in the right way.
Then Scott, and I mean, Scott, as a new entrant into the market, how did you perceive all of this in the UK market, I should say?
We are going very slow in the UK. The UK does, I don't want to get myself in trouble. So we are being very, very, very cautious about what we want to move behind in the UK. We do not want to step on any toes. We do not want to upset anyone within the CAT. And we've seen some Americans, some friends of mine that went in with the big American way and made a big splash, and all of a sudden they're getting £100,000 fines and for small issues. And so we want to be very careful on how we go about it. It's just getting involved in the UK is so expensive. And so it's It will not be the first market that we fund a case in. That will be in one of the smaller European markets here where we feel that it's a little more friendly for us.
Ben, anything you want to say? Or
I mean, PACCAR was, you can't dress it up. It was not good for the industry. It was mostly unforeseen. We knew there was a bit of a risk area with the way the legislation would be drafted, but we didn't expect that decision. We don't think it's a great decision. There was legislation mooted to overturn it, and then there was a CJC review in parallel, so that like, well, okay, we'll get the review, may have some recommendations we don't agree with, but we'll consult to that, and then we'll get this legislation to overturn PACCAR. Then with the change of government, the ability to change the legislation essentially fell away or got delayed, and now we've still got this review, so it's kind of like a double negative. We're removing the positive, and then we're watching with interest what the CJC review will be and what their recommendations will be with any further regulation. Litigation funding already is self-regulated, it is regulated, and any other sort of points that they may make.
well, we're now at minus 1.5 minutes on our time, so with that, I'll throw it out to the floor to see if there's anyone who wants to ask any questions of any of our panelists. Oh, we've got a question here.
Thank you so much for your comments. My question is, what non-monetary benefits or non-monetary contributions do you bring to your clients who come to you for funding?
I mean, for us in particular, since I started off focused on consumers, focused on the individual clients, that's been our passion. Our passion is trying to make sure that we never lose focus of the people that we're trying to help in the end. And when that goes to a law firm, that's the same thing. I've had the rug pulled out from under me from a funder before, so I know the pain that causes both the law firm and the cases as a whole. And so we want to make sure that when we are funding these cases that we keep the end goal in sight, which is taking care of the consumer who is, we're trying to make a difference for. Yes, we're in the business here, we're trying to make money, but you've got to take care of the consumer. You've got to make sure that the law firm itself feels safe in that investment, because it's a terrible situation to go through.
And also, can I just add the Royal Mail scandal, where Therion backed that, and they received some criticism. People didn't realise how much it cost that case, and that the defence were going to spend £100 million defending that case instead of redressing people who'd be falsely accused of criminality, and some of which had committed suicide. What the settlement did is it allowed those individuals not only to receive some money, but they cleared their name, which was so important to them and the families, and that was a very good indication of a non-monetary value for the class.
Yeah. Thank you. I'm sure we're well over time now, so I'll just say thank you very much to each of our panelists. I think funding is and will remain a crucial and central part of class actions as we go into the future, so we hope you found the discussion interesting. I'm sure if you grab any one of us, we'll talk to you about funding until you're blue in the face. So thank you very much, everyone.